Welcome back to another edition of Targets in Focus. Today I'm joined by Antje Praefcke from Commerzbank in Frankfurt, Germany. Hi Antje, thank you for joining me today. Let's get started, shall we, with the euro dollar. Tell me what you're expecting in the short, mid and long term.
Well, in the very short term we have two problems. The one thing is the debt ceiling in the US. The opposition and the government have to find an agreement to increase the debt ceiling in the US. If not, there is a probable default of the US. We don't think that will happen, but in any case, this is a problem that could weigh on the US dollar in the short term. But on the other side of the Atlantic, here in the Eurozone, we have got a much bigger problem. And the bigger problem is that on Thursday, we will have an emergency summit of European Union leaders, and they have to find a solution about the Greek problem. Now, the market knows about the problems in the US, but it knows as well that before we had problems in the US as well concerning the debt ceiling, and they were always resolved. So that's a problem, that's an acute problem, but we have already seen solutions to that. Whereas in the Eurozone, the main problem is how to finance Greece, how to avoid any contagion effects on other countries, as we have seen with Italy last week. So this is the bigger problem, and for the moment the market focuses on that, which means that in the very short term the euro is likely to remain under pressure, and I do not exclude another test below 140 in euro dollar, or even a little bit lower. In the longer term, however, we think that since it's such a political problem and an economic problem as well, in the longer term, if we do not find a solution to the Greek problem, EU leaders will find a solution, and they will come up with something, if not this week, probably in summer. So we think that things will calm down over the next couple of months. That means that the euro has some recovery potential against the US dollar, because, as I told you before, we have other problems in the US, not only the debt ceiling, and the US has to save money as well, but we have a very expansionary policy of the Fed. So this is likely to come back into focus in a little bit longer term perspective. But then next year, rate speculations will come up that the Fed as well has to act on rates, and then that time we will see a recovery of the US dollar. So in the very short term, euro under pressure because of uncertainty about the Greek problem. In the medium term, recovery of the euro, but in the longer term, the next week, again, gains of the US dollar on rate expectations from the Fed.
Moving on then to the Kiwi and the Australian dollar. What's the situation there?
Well, Kiwi and Australian dollar are both currencies driven by the commodity market. So as long as the economies in Asia, specifically in China, are humming and the demand for resources is high, both currencies should like to remain bid and quite strong, especially against the US dollar, because, as I said before, the US Fed policy is very expansionary, whereas we have quite high interest rates already in Australia, and the likelihood that rates were going to be hiked later in the year in New Zealand as well. So the rate differential now and in the future just supports the Aussie and the Kiwi against the US dollar. In the what I like to do is to compare the Aussie and the Kiwi, because fundamentally the economic situation in Australia is better than in New Zealand. We already have high rates, we have resources boom, we have low debt levels in Australia, so everything is supportive for the Australian dollar, but rate expectations are already high, whereas in New Zealand rate expectations are not high, because the New Zealand Central Bank even lowered rate in the wake of the earthquake in Christchurch in March. So we have more upside rate speculation possibilities in New Zealand, which means that on good New Zealand data, people in the market prefer the New Zealand dollar over the Australian dollar. So I think for the moment at least, the New Zealand dollar will outweigh and outperform the Australian dollar, but both will remain strong compared to the US dollar.
And what about the euro stocky?
The stocky is a currency quite strongly driven by risk aversion and uncertainty in the market as well. Fundamentally, I really like the stocky because the Swedish economy is humming as well. It's going in tandem together with the German economy, and it's very dynamic. They have pretty low debt levels because during the financial crisis, the stimulative programs in Sweden had been pretty small, let's say that. So they do not have the consolidation necessity that other countries have. So they had done their homework before. They have low debt levels. They have rising rates as well. We just heard this morning from the Dukascompy's minutes that they are likely to hike rates at every meeting this year. So we have rising rates, low debt levels, and we have an economy that's humming. But in the very short term, as long as uncertainty in the market is high, people tend to go out of the stocky, go out of the Swedish market, and that's currently weighing on the stocky. But levels around the 9.25 or even 9.30 level in Euro stocky for me are selling levels, because from a fundamental point of view, I really prefer the stocky over the European currency.
Good stuff. Thank you, Antje. We'll be joined all week long by top banks here on Dukascopy TV for more Targets in Focus. Goodbye for now.